Good morning, good evening, wherever you may be. Today, I want to get into institutional DeFi, what that means, what that is, and how I see the DeFi space maturing and shaping up for institutional money to come in as a serious catalyst, a serious component of the space. And with that much money coming into the space or getting ready to flow into the space, there's going to be some things that change, or we'll start to see certain products more and more often. And with that being said, let's get right into the content of today's video. So a couple months back, I really started to see like this focus on institutional DeFi or, institutional money flowing into the decentralized finance space. And so, just doing my research, I've come across a few white papers, this one in particular, Institutional DeFi, the Next Generation of Finance. Uh, in this there's some examples, there's some um, trials, I guess you could call them, involving DBS, Onyx by JP Morgan, and SBI Digital Holdings. So they've definitely been working on use cases for institutional DeFi for quite some time. I'm pretty sure they had been working on this well before the contents of this paper was released. So it definitely helped give me some insight on where certain attention or certain resources will be placed in terms of getting institutional money into the digital asset space. So I won't go through the whole thing because it's a 54-page paper. But I will point out a few highlights. So, coming in on page 10, they talk about the application of smart contracts and asset tokenization. So, that is definitely an area that I see becoming more of a focus, especially when it comes to institutional money getting into decentralized finance, asset tokenization, RWAs, which stands for real world assets, things of that nature. But anyway, they go on to say asset tokenization also has delivered a number of benefits, including enhanced and new offerings. For example, JP Morgan leverages tokenization to offer intraday repo solutions for clients on its Onyx digital assets platform, and DBS Digital Exchange offers corporates a platform to raise capital through the digitization of their securities and assets, with options to offer smaller denominations. So, asset tokenization is going to be huge. I definitely wouldn't scoff at that. And then another quick highlight, institutional DeFi will need to incorporate the same, if not higher level of standards to meet regulatory requirements, create trust, and drive adoption by issuers, investors, and financial institutions. So this section really talked about security and securing your assets, custody of institutional assets, KYC, AML, data privacies, those types of things. So they're really putting a focus on areas that make traditional or that made traditional finance, regulatory compliant, safe, easy to operate. Well, I wouldn't say easy to operate, but regardless, they're focusing on aspects of traditional finance that needed to be in place in order to give that area or sector legitimacy. Same thing goes with digital assets and institutional DeFi or just DeFi in general. You want to offer protections for your customers. You want to offer KYC, AML, aspects just to keep the regulatory regimes off your back, that type of thing. So I definitely see this side of things being focused. But like I said, this is a 15-page paper, so I might put this into the description of the video just so you can give it a read yourself, because they definitely go into a lot of different things like different types of products, different, I guess you could call them test cases that they perform to strategize and put together products that would fit well in the institutional DeFi space. But that is that. Moving on, we had news of Ondo Finance and Ripple partnering together. So there was this announcement yesterday, actually. Ondo Finance expands institutional reach with OUSG deployment on the XRP ledger. So we'll get into this real quick. Ondo Finance will deploy Ondo short-term U.S. government treasuries, or OUSG. It's tokenized U.S. Treasury fund on the XRPL, a decentralized layer one blockchain. This deployment, set to go live within the next 6 months, will bring OUSG to the XRPL's broad institutional user base, introducing a composable and compliance-first asset to a blockchain built for financial institutions. This integration establishes an avenue for institutional DeFi and advanced cash management solutions, bringing DeFi and traditional finance closer than ever. So, again, another aspect or product, if you would call U.S. Treasuries a product of traditional finance or TradFi in the DeFi space. I definitely see more and more of this happening. You know, when it comes to institutional money, they are extremely serious about making a yield, a real yield. And I had to learn real quick in DeFi that if you don't know where the yield is coming from, you are probably the yield. You, the participant of that platform is probably the yield, and that's not a good place to be. Um, it's DeFi. It started off with a lot of, reward tokens, farm these tokens, sell these tokens. It was very short-lived. If you didn't really get in at the onset of that token being released, it was very rare that the reward token held its value due to all the sell pressure because people were selling to, actually realize the rewards. But institutional money is not going to play that type of game. We've definitely matured a little bit in the DeFi space since then, but um, I think it's almost time for another maturation moment for the DeFi space. And I think we're seeing that with the advent of institutional money really getting into the DeFi space, especially with products like this, the OUSG, which is short-term US treasuries. Um, you get a real actual yield through owning or holding these treasuries, minting these treasuries. So they're offering 24/7 mint and redemption features because it's on blockchain. Traditional finance has not been able to offer anything like that from a, just all day, every day, 24/7 perspective. Of course, established liquidity. Ripple and Ondo have secured commitments to seed OUSG liquidity upon initial deployment, driving further adoption of tokenized RWAs on the XRPL. And institutional investors on the XRPL will, for the first time, have access to OUSG, a product combining security compliance and yield backed by a high-quality U.S. Treasuries fund and stringent KYC AML standards. So again, going back to all the requirements that need to be in place, all the rails that need to be in place in order for institutions to feel comfortable participating in the DeFi ecosystem, the DeFi space as a whole. What I'm interested in is this established liquidity piece. Ripple, of course, they have partners. I'm pretty sure Ondo Finance, they have their partners. So I want to know, it'll be nice to know who their partners are, just so you can kind of get an idea of how high the demand is for a product like this. And, you know, the level of interest, the level of liquidity that we could see flow into products like this. That would be interesting. But I mean, to me, this just highlights, the demand, the appetite for products that are built in new age technology, new age of finance, like digital assets and decentralized finance. So definitely see a lot of these types of products hitting the market. Another one that I've kind of come across is Ocean. I hope I'm saying that right. Um, this was built by Clearpool. So if you're part of the Flare ecosystem, I'm pretty sure you're familiar with Clearpool, since they deployed the first natively issued stablecoin on the Flare network in USDX. This is another platform of theirs. They have a RWA institutional DeFi platform called Ocean. And I mean, here, native yield on stablecoins. Again, another product that I foresee a lot of attention coming to in the near future, native yield alongside or being tied with the stablecoin. So, in the example of USDX on the Flare network, if you hold USDX or see USDX, you're earning, I believe it's 7% around about a 7% yield by the 3-month treasuries, U.S. treasuries that are being held in order to mint that stablecoin and back that stablecoin. So I definitely foresee a lot of products like that coming to the market. Again, real yield. You have to be able to tie the yield to something that is usable, that has some type of demand that you can redeem against, things of that nature, in order to actually drive that full cycle. So native yield backed stablecoins are going to be a huge thing. Opt-in unified compliance layer. So permission blockchains. Not every institutional player is going to want to operate on a public blockchain. Now, of course, you can complement a public blockchain activity with a zero knowledge proof of some sort. So all of the institutional's business or moves are not just out in the public. I'm pretty sure they're going to want to keep some things to themselves, especially when it comes to competition with other institutions, institutional players. I'm pretty sure they're not going to want just all their moves out there on the public ledger. So I definitely see permissioned blockchains or zero knowledge proof solutions being deployed more and more. To kind of give that compliance or privacy layer there. So would not be shocked to see more moves like this coming into play. And then, of course, Web3 abstraction, just making the experience as seamless and familiar as possible. I do think Web3 applications still have a long way to go to remove some of the complexity that and just abstractness that a lot of Web3 applications still have today, like signing a transaction, that type of stuff. But I definitely think it's doable. I think a lot of Web3 projects are still steady working on bringing a Web2 experience with Web3 guarantees. Hugo Fillion, I'll steal that from you, so shout out to you. Um, so yeah, just I see more and more of this, just simplifying the experience, improving the overall user experience. So would not be surprised as we get closer and closer to those familiar, easy, seamless solutions. Moving on. Again, just highlighting Clearpool, the Ocean blockchain for RWA yield. If you're not in the US, you can actually lend and mint USDX on your own. So if I click lending, I'll get an error message because I'm in the United States. So can't wait for those restrictions to be lessened or removed. So, United States citizens, we can participate in all of the wonderful things that are available in the digital asset space. But again, just highlighting natively yielding stable coins. That's, in my opinion, going to be huge. I definitely don't see why they wouldn't be. I definitely think existing stable coins like USDC, USDT, they're going to have to figure something out to be competitive with these new stable coins that are getting, tying themselves to a native yield of some sort. And then there's, of course, being able to issue credit on chain, which I thought was a very interesting idea. Definitely don't understand the inner workings of, issuing credit, issuing, um, or building up capital by tokenizing your stock or anything like that on chain, and then being able to issue that in order to raise capital. There's a lot of things in the financial world that I am not familiar with, if I'm being honest with you. But as I'm learning about these things, I'm, researching, and my mind is just opening. My perspective is really widening here. So all of these things are interesting. Definitely. Wouldn't be tailored to me. Not all these products are tailored to an individual or regular person like me. Definitely see why institutions would either want or need some of this just to continue to operate business. So definitely foresee the DeFi space maturing and bringing these products that are currently available in traditional finance over to the decentralized world, simply because it's more efficient, faster, easy to formulate capital. probably easier to keep up with on the individual ledgers. So it's really interesting. I think 2025 is just the beginning. Obviously, in the United States having seemingly having a favorable environment for digital assets compared to what it has been. So I definitely, like I said, foresee a lot of the DeFi products that we have today maturing and having to innovate and upgrade their offerings along with these new DeFi offerings, Ocean, Ondo Finance, Clearpool, those types of institutional targeting products will become more and more popular for sure. Definitely foresee that. But with that being said, that's really my outlook on the digital asset space, particularly institutional DeFi. People, especially people that I talk to in my own personal circles that may not be invested in crypto or even in the stock realm, they don't fully understand how all of this stuff works or why digital assets, to a degree, are important. Well, this is why. The digital asset space is constantly growing. In my opinion, the digital asset space is going to swallow the stock space, the indices space, the other aspects of traditional finance. And no, they're not going to go away. They're just going to look different, and they're going to operate within the space, within the realm of digital assets in institutional DeFi in general. So I definitely foresee traditional finance looking a little bit different in the coming years. Um, so that's always exciting. I definitely think there is opportunity to build the next NASDAQ on a blockchain, and things of that nature. So, like I said, we're just going to pay attention to how this stuff develops, but I definitely think the opportunity is right. The environment is just right, especially here in the United States. We're going to have to find out more as we get into Trump's presidency on where the people he surrounded himself with, especially like David Sachs, who is the crypto and AI SAR for the White House, where his recommendations fall. And again, how we start to see big players build out these solutions and offer them to their institutional clients or even, regular individuals around the world. So this is interesting, but things are still developing. And this is just where I see DeFi going in the next couple of years. So all things very interesting. I'm very excited to see where this goes, and we'll stay tuned. With that being said, man, thank you for watching this video. Thank you for staying tuned. If you liked this video, be sure to give me a like, hit me with a subscribe, give me some comments. Let me know what you think about where institutional DeFi is going. What do you think about some of the offerings being showcased or being displayed here in institutional DeFi or just DeFi in general? And how do you feel about institutional players really getting into the space? I think we are about to see a wave of liquidity like none other hit the digital asset space. That might sound like hype, but I don't mean it to be hype. I mean it to be as literal and grounded as possible because, like I said, the previous administration here in the United States was not favorable to digital assets, but it almost feels like we've done a complete 180 and the opportunity is ripe. So, with that being said, hit me with a sub, and I'll see you in the next one. Peace.